Uh, Let me ask one question to the three union representatives here, and that it's a two-part question. And my first part is, in your experience, how do workers feel about the reality that their CEOs in America now make 350 times more than the average worker? That's question number one. Question number two, what plans do you have to organize the unorganized in your areas of influence? Mr.
Are taking huge action this week. Democrats and Republicans are discussing plans that would help cut poverty in half, and states have established new crisis relief programs aiming to provide relief to low income. This comes with extra stimulus cash and extra money in their bank. But now many of the crisis tax benefits from the past 2 years, like the expanded tax credit and temporary expansions to the child and dependent care credit and federal stimulus payments, all ended in 2021. A community refund will be a little bit smaller this year. And some Americans may find themselves owing taxes again. And according to Mark Stebner, a tax expert for Jackson Hewitt, next year a lot of things are put into place for 2021. And some part of 2020 will revert back to its pre-crisis years. It can lead to a refund shock or, even more importantly, balance due shock. In addition, some new regulations were put into place. Student loan forgiveness, for example, is exempt from federal taxation, and borrowers in some states owe taxes. One of the changes is that the standard deduction for 2022 is higher. It's typical for the standard deduction to increase a little each year, along with the rate of inflation, for your 2022 tax return. The standard deduction for single filers has been increased from $12,000 to just $12,950. That's up by $400, and it has bumped by $800 if you're filing married jointly. The standard deduction is what most taxpayers will simply have with a simple tax return in order to claim and reduce their taxable income. Income tax brackets are also higher in 2022. For 2022, income tax brackets were also raised to account for inflation. Your income bracket to how much tax you owe, based on your adjusted gross income, is the money you owe before taxes are taken out. And while the changes were slight, if you're at the bottom of a tax bracket, you may have bumped down to a lower rate for your returns. And while 2021 had a temporary expansion of the tax credit, including eligibility for more dependent credits and offering advance payments, it isn't the case for your 2022 taxes. The child tax credit has already dropped back to its pre-crisis amount, which is $2,000 per child, and now available to people 17 and under. The credit, which was fully refundable last year, is only refundable for a certain amount of people, meaning not everyone gets a stimulus payment this time around. Offering an important note that you can still claim the tax credit in 2022. It may help boost your refund and offset a tax bill. And while federal benefits have decreased, the states are offering child tax credit benefits this year and next. The governor of Vermont has signed a tax cut package, and it will send $1,000 to every child 5 and under to Vermont households making $125,000 or less. And with federal stimulus money spending flooding into the states and boosting tax recipients, the Democrat-controlled legislature and Republican governor agreed on something that they're usually at odds over. It's cutting taxes. The House initially sought to spend nearly $50 million, almost entirely dedicated to the tax credit alone. The Senate responded with a $36 million package, only $22.5 million of which would have gone to the credit. In 2022, lawmakers in New Mexico and New Jersey even created the new child tax credits. And now, like California,
at least I didn't, too many people that were working, or the working people were making too much money. I just thought that was not the best answer to how to get it down. Now, one reason we've seen inflation fall by 2/3 without losing jobs is corporate profits are coming back down to earth. The excesses are being eliminated by the corporations. We have more to do, but inflation is now the lowest point it's been in 2 years. When the Inflation Reduction Act was passed a year ago today,
now they're getting ready to pass it, and the lawmakers in the House are ready to move to vote on a stopgap spending bill and to prevent a government shutdown. But states have been actually talking about tax cutting sprees, and now a proposed Pennsylvania tax break could result in big tax cuts. If the tax breaks happen, this will not be good. It's fueled by surging revenues. States have been slashing taxes for individuals and businesses for the past 3 years. But tax cuts are expected to come to an end in some states in the fiscal year. Some 25 states have cut individual income tax rates since 2021. And the lawmakers in many states have been approving tax cuts aiming to help residents financially. New property and rent relief rebate checks are going to be sent out, and these payments are worth billions of dollars. and will equal hundreds of dollars for many people. As fueled by surging revenues, states have been slashing taxes for individuals and businesses for the past 3 years. But tax cuts are expected to come to an end in some states in the fiscal year. Some 25 states have cut individual income tax rates since 2021. It includes 22 states that reduced their top marginal rates. In 2023 alone, at least 8 states approved rate reductions. And Arkansas is trimming its top individual income tax rate to 4.7% after reducing it from 5.5%. Aside from individual income tax cuts, states have proposed rebate checks for their residents. Last year, 17 states issued inflation relief payments as well. And now, if you're a Massachusetts resident, income tax refunds were available to you if you paid personal income taxes and filed your return by October 17. If you file your state return by October 17, you should be able to get your stimulus check back. Nearly $100 million in rebates will be sent out to residents across the Commonwealth of Pennsylvania. Starting today, over 4 million older homeowners, renters, and people with disabilities will be issued rebates on rent and property taxes paid in 2022. According to a release, the rebates will be allocated to eligible Pennsylvanians who submitted an application through the property tax and rent rebate program. Applicants who submit their bank account information on the application forms will receive the rebate through direct deposit. And those who request a paper check to be mailed should expect to receive the payment in the mail too. But after the initial distribution of rebates in early July, rebates will be distributed as claims are received and processed. Recently, a Pennsylvania governor called for a major expansion for the relief program, which provided a lifeline for Pennsylvania renters and homeowners. Under his proposal, the maximum standard rebate would increase from $650 to $1,000, while the income limit for renters and homeowners would be made equal and both increased to $45,000. But these income limits would also be tied to the cost of living moving forward, which means people who receive a rebate won't have to worry about losing their eligibility through no fault of their own. Ultimately, the proposal would result in nearly 175,000 additional Pennsylvanians qualifying for a rent rebate. Hoping to attract new residents, the governor has also proposed new tax breaks, and according to recent data, Pennsylvania experienced a notable population decline between 2 years. Some people may consider Pennsylvania to be a high-tax state due to generally higher property taxes and high gas taxes.